Hey everyone, welcome back. My name is Levi Woods. This is Drawbridge Finance. Hope you're having an awesome day. It is 11 a.m. Pacific Standard Time. It's not even lunchtime for me in this part of the world yet, and the trading day is 2 hours from being closed. My phone is making some noise today. Hope you guys are having an awesome day. This is my favorite time of the week because I get to talk to you about what I'm doing and what I'm trading. Now, the interesting thing about being a YouTuber, there's so many things that are great about being a YouTuber, and one of the things is that I get to share and meet with fantastic people. Now, as you guys know, nothing that we talk about here or on my Discord or on my emails or anything like that is financial advice in any way, shape, or form. It's just what I'm doing and what I'm looking at. And that's what I post. And I've been posting this for years. And I'm going to talk a little bit this morning about trading services like mine. I've got a new link. I've just posted it in the chat here on YouTube. So if you check that out, that is a new potential way for you to join the Drawbridge Traders Club. So I have the Patreon account, which I've had for years and years and years. So what this does is Patreon acts as a paywall, and it allows you to get into my chat room, which is on Discord. Now, if you guys want to get into the Discord, I do have a free portion of the Discord as well. I'll post that in the description as well right now. But one of the things that Patreon's been great for me. I've been with Patreon for like 8 years or something. This has been great. And one of the things about let me just get this link here before I forget what I'm saying. One of the things, hey Terry, good to see you. One of the things that I love about Patreon is it's great. It's consistent. It's easy. But there's some limitations in the value that I can offer you. So I've been trying to branch out and look for another provider that would allow people to have access. And so I've decided to go to with WAP.com. They reached out to me years ago, actually, and said, hey, our service is like fantastic. We are going to be a competitor for Patreon. Are you interested in migrating your service over? Now, in no way, shape, or form am I leaving Patreon. And of course, it's still going to be available. So if you go back and you want to join through Patreon, that's great. Or if you want to join through WAP, that's also great. But they offer slightly different ability to sign up for the same thing. For example, with WAP, I can actually give a bigger discount. If you want to sign up for an annual membership, I can give a huge discount, massive. So my current price for my options trading club or for my Drawbridge Traders Club is $159 US a month. And the reason that I charge so much is because I give incredible value to everybody that's a member. But by allowing myself to go through Patreon, I could do annual memberships, but I was capped at the discount that I was able to give. I could only give an 18% discount for people that wanted to sign up for a whole year. And I wanted more than that. So I have gone ahead and set up a WAP account. And with that, I'm just going to click on the link right now. I'm going to bring it up. I'm going to show you exactly what it looks like. And we're going to walk through why I decided to go this way. So, and this is new. It's not a replacement. It's just something new. So this is it. There's the link if you go to it. Obviously, if you need a ton of assistance and you want to do like a weekly chat with me, I do have limited spots available for one-on-one coaching. And I limit this to 2 people. I currently have 1 person right now. So I have 1 spot available. If you are trying to fast track your knowledge in options trading and you want like one-on-one weekly discussion coaching, then that is what this is for. That's the $9.97 a month. And the idea is that you get full access to all the Discord, you get all the trade alerts, and you get to see what, you get to talk to me once a week or more. I mean, I really don't care. If you guys are like, need the help, I'm there to help. That's what I'm doing. I've been doing this for a long time. So, but my Traders Club, $159 a month. I'm going to click on this. This is just the regular one. This is for people that want to join. And you'll see here, there's 3 options. And this is what I was excited about. So if you want to sign up monthly, and just try it out, it's $159 a month. And then I've got this 3 months, I'm able to give a 16% discount. So $399, you can do that. But look at this, I can give a whole year for $9.97. And then I also have this ability to just do a one-time purchase, $2,500 US, one-time, lifetime access to the Discord. So if you guys are, even for people that are on Patreon, if you're deciding, if you're like, you love my service, because I know a lot of you do, and you're thinking, oh, well, I'm planning to stick around for a long time. This was something I wasn't able to offer through Patreon. So it's something you can consider. If you're on the monthly on Patreon, at the end of the month, just cancel and go into the one time and on WAP, and then we'll continue from there and you have access. Now, I want to continue talking about alert services because that is what I run, and it is an alert service. I am involved in a ton of different communities. I'm involved in like local communities. I'm involved in online trading groups. I promote other people's products. I'm in Discord for resource development. I've been asked to help develop apps. I sell my spreadsheets. I have a huge amount of things going on that kind of integrate with the style of trading that I do. Now, one of the things that I have found is that as we spend time doing what, our work or job in the day-to-day life, is that when I join a service that is an alert service, or I join a service that is some sort of information, I want it to be very simple to use. And I'm going to go on a little tiny bit of a rant this morning about services because I feel like there's people out there and they have incredible products. They have like an incredibly resource-rich community, and then they completely fail on the side of specifics. What are we talking about specifics? So I'm going to give you two examples that happened today in two different paid groups. Now, one of them is very inexpensive, and the idea is that you use their service to find trades, but they have a robust Discord. There's lots of discussion. There's lots of chats, and it is messy. And there's people talking in all the chat rooms, and it's hard to decipher what's going on. I asked a very simple question and I got a completely rude response from one of the other members. Now, I understand that this was not an admin. I was asking, what is a specific trade? Because I didn't have time with my prep for my live stream and running my own Discord to go through and look at the actual tools and go through the work myself. And I know that these guys are in there doing this stuff themselves. So I just asked, and I got a snarky, asinine response that should be moderated by the administrator, but it wasn't. And I am seriously considering just opting out completely of that service. Now, this is a service I get for free. And I'm thinking, if I'm going to have that kind of thing happen, I'm out. So that is definitely one consideration that's happening. Now, a second one is one I pay for. This is another service similar to mine. The reason I pay for it is because I want to see what other people are doing so that I can see if I'm keeping up with everybody else, not from a return standpoint. I make fine returns, that's never been an issue for me. But what I'm looking for is, how do people post? What are they doing? What is the response? Does this make me feel good to be part of the membership? And, I've been lucky because I've been running my service for so many years. For 8 years, I've been running it. I got a lot of feedback in the beginning, and I take that feedback very seriously. So when I had somebody reach out to me and say, hey, Levi, this is what we want. We want trade alerts. We want entry, adjustments, and exit. That's it. Alert, adjustment, exit. Simple. That's what I provide. So if you go into my Discord, that's what you see. It's this is the type of trade. They're categorized by type of trade. So this is a trade on a stock, or this is a trade on a future. There is a screen grab. There's a specific credit or debit that I got into the trade. I don't do non-trades. I'm not theoretical trades. There is a chat room for that, for people to discuss theoretical trades, but I only post trades that have real fill prices, and I post exactly what I entered when I enter it. Then I post the adjustments. The reason I'm saying this is because I'm in another group that's $200 US a month to be involved. And they have a zero DTE trading group, which I have as well. And I barely trade any zero DTE. It's not the type of chat room that I'm in. I don't like that kind of stress. And I find it hard to actually alert people. But all it's filled with is, in this other server, is alerts of past trades. And so it's like a bragging room. And you're there's nothing more insulting than telling your customer who's come to an alert service, and literally in a section called follow and learn, but we get an exit alert only. And when we see an exit alert only, we see no entry and no way to follow or learn. So it's completely useless information. If you're going to provide an exit, then there should be an entry. And it's crazy. I just don't even understand. How can you guys run these services like that? Now, that said, I belong to some really great services that are very much structured like mine. They're like very simple. They're like, here's the trade, it's posted, and then here's the take profit. Now, I've gone a little bit further. You guys know what my trades look like. Here, I'm going to show you. I'm going to show you exactly what my Discord looks like right now. We're going to pull it up. Am I like in streamer mode here? Let me just pull it right up here for you on screen. And just give me 1 second. I'm going to pull up what I see when I'm looking at my Discord, and I'll show you what I mean about what I'm providing. And you guys can just see these trades. So hopefully you can see what's going on. So this is my server. I know there's a bunch of people, and you can see, like, look at how many different servers I'm in. Tons. So I'm busy. I'm a busy guy. Okay, this morning, what is this? This is a QQQ trade. So first thing that I do when I alert is I give a trade reference. And the reason that I give a trade reference is because this way, any discussion about any trade, this has a very specific trade reference. So I put in this trade. QQQ's trading at 615.68 a share, and the VIX has dropped again down to 1749. I'm playing a double calendar with 2 times the contracts below the current price of QQQ. I will plan to take this off March 5th if QQQ is in the range between 608 and 622. If I hold into the last week and it's not trading near one of the spikes, it will start to lose money. Today's trade, opening QQQ put calendars, the March 13th, 590 puts times 2 short, the 630 put, just single one of those, long the 590. These are the March 13th. So when we look at this actual screen grab, you can see right here, you can zoom right in, you can see what the trade is. This is the March 13th contracts, this is the March 20th contracts. And there's the bid ask, and what do? I provide the actual debit that I got into it for. I also provide a screen grab of what it looks like. This is option strat. This is how. This is one of the ways that we can build trades out. And so when I see this is the type of thing that I'm doing in my chat room, and I do this for every single trade. I did a meta trade, nice big profit tent there. TQQQ did a 131 trade here. Putting these in, and these are real time, and all of the information is there. So it kind of boils my blood a little bit when you've got these people like, there's people that reach out to me and they're like, oh, must be nice. You're putting in these trades and you're charging people all this money. Like, this is my job. This is what I'm doing. I am here working. I am finding optimal trades, and I am putting these trades together, and I'm providing clear, concise information for all of you. So when I'm in other groups and I see people that aren't putting in that effort, and just bragging. Like, if you have an alert service and all you do is brag, get out. I tell you that it's just makes me and all of your customers sick. Okay, so now let's talk about something we talked about last Tuesday. Something super, super positive. Okay, the CRDO. Now, last week during this stream, the free public stream that I do, we talked about this trade. Trader Brian was on. He's been a longtime member of my group, and we talked about this trade, and we said, hey, here's potential of Credo going up on earnings next week. And like, this was the setup. I put this alert out specifically in my chat room, and this is why people pay to be in part of my chat room. This trade, if I closed it today, has a profit of 1606 in 7 days. In a week, it made $229 per day. The total risk on this trade was quite big. This is a large trade. This is like a $31,000 trade. So it's not like this is a tiny little trade, because it did have downside risk. We had in this case, what did I have? I had the one. No, I didn't. I actually didn't even have that much risk on. Let me pull up the whole chart here. Let me see to make sure I'm not talking out of my. I'm pretty sure I do. I did take full risk on this. Yeah, I did. I had full risk. If this went to. No, I had a long put on. I had a long put at 107. So the maximum this could have lost was $5,000. No, $10,000. It could have lost $10,000. And you know, these are the types of things. I base this one on margin because it does have lots of risk on the outside. So I would have closed the trade if it had gone against me. And what we're doing is I'm using largest margin to calculate this. So that's why this percentage return is so high. But the reality is what we're looking at is a trade that made $1,606 if I closed it now. If I don't close it right now, there's another potentially $200 that I can make out of this. I am hoping to close this. You can see where the stock is trading. It's trading like at 138 a share, and my max profit is at 130. So it's well into the profit zone, and it expires this Friday. So my hope is that I'm going to be able to close this for $15. And this isn't a live chart. This is just a screen grab. But if I did that, if I close this for $15, then my profit is going to be $1,800. $1,800. That's the kind of trades that we're putting on. So for people to think that my service isn't worth it, or that they're considering using other services, this one trade paid for 2/3 of a lifetime membership if you were to sign up on WAP. So we're going to see how that goes. If I have too many people signing up for the lifetime membership, I may cap that. So if you're considering it, it's brand new. I've just launched it a week ago. I've had one person sign up. I haven't even made an email about it. So if you see that link and you're interested in signing up for the service and you want to take advantage of that, I'm not sure if I'm going to cap that one-time license yet. But for right now, I've got some spots available. So hopefully some people are able to take advantage because they're watching this stream right now, and I've got the link posted there. So let's get into what is going on in the market, because man, the market is doing well for us. We've got 7 people online. This is fantastic. I've got 1 like. If you guys could drop some likes, that would be great. That helps me a ton. Okay, now let's get into, I am fired up today. So let's get into what the market is doing. We got the SPX down slightly. You'll also note that even though the market is down, my sign is green. I'm positive. It's, you know, the trading is not that hard to do. So what we're trying to do is trade some ranges. And that's why you see the types of trades that I'm putting on. These have these nice big wide ranges where I can make like quite a bit of money and I have limited risk to the downside. That's the whole game, isn't it? Hedge your downside risk, try to make a lot. You know, asymmetrical trading. Okay, so SPX, we're down 0.15%. We're trading very, very close to all-time highs. Are we looking for a pullback? Probably. So could it go up? Possibly. We just don't know. That's why we play ranges. That's why I play ranges. NQ. Before this breakdown, outside of this wedge, we talked about this bearish ascending. There's an ascending triangle here, and then there's this bearish flag. Both of these are bearish. This purple triangle. Let me just draw it on here so we're clear here. There's that line, and there's this line. When we were inside of this was bearish. This is a bearish position. There's also this pattern right here. Got a tickle in my throat here. Excuse me for 1 second. Okay. So when we see that pattern, we also saw that this is also bearish position, and there was potential for it to break down. Both of those things occurred. Now we're looking at the bottom side. We're looking at this particular line here, and we're saying, is this going to act as resistance? There's a very good possibility. Point of control is actually above the current price, which is wild. Considering so far back, like look at the time frame that we're looking back. We're looking back to last March. So we're looking back a full year, and point of control, there was so much trading happening up here. Point of control is above at 25,780. We're currently trading at 25,300. That's 400 points above. This is where we just don't know. Where is it going to go? The breadth is to the upside, so there's still pressure to the upside. Russell, I've got these little signals on here. We saw a move to the upside here, also showing positive potential on the Russell. VIX coming down, isn't quite down under our average, but if we look at this, coming close to that red line. So, as premium sellers, I want to sell a lot when the VIX is high, which it's had some nice spikes over the last year. It's been fantastic. We didn't love this because it corresponded with a sell-off last March, April, but These types of spikes are fantastic. So we just saw one last week. We took advantage, and that is exactly the reason why my sign is green this week, because taking advantage of those particular things. Oil is definitely at the top of its channel. So I would be I never bet short oil to the top side. I don't do it. Oil can move up exponentially fast, as we saw with like gold. You know, oil can make these kind of moves. Gold still continuing to press higher. Silver chopping. I would, if this was me, I would be buying gold and not silver, but that is, you know, up to every individual investor. I'm not currently sitting out of those positions right now. Apple showing a little bit of strength. There's more from the put call parity. There's more calls to the upside. So there's bullish potential here, but we did see a short signal just recently. So, you know, what I'm looking at with these is I look at this point of control, you know, like where were people buying the stock over the last year? You know, there's some volume here right at the 255 level. There's also some volume here around that the 270 level. 270, that's another big spike in trading. That's why it moves so quickly through these ranges, because it moves from spike to spike. And it's important to know when we're trading these types of things. This next one down here is at 230. So if Apple decides to sell off, it could come down. It's very, very light trading. We're at all-time highs just recently. So there's not a lot to the upside here that's been explored from a price perspective yet. But the options chains are telling us that there's still bullish momentum. AMD coming down. Look at how well this trades inside this Bollinger Band strategy you have on. Trades outside of it, then immediately is inside, comes down, tests the bottom, up to VWAP, down to the bottom of the Bollinger, up to the top of the Bollinger, down to the bottom of the Bollinger. Tests out, we get a short signal. It excels outside this. VWAP expands, it comes right down to it. Wild trading. I love some of these indicators. Okay, something's going on with my throat. Okay, what else are we looking at? RK. I'm currently long RK. Why? Why am I long? Because we just talked about these Bollinger Bands. Look at how it trades. When we start to see it trading outside, if it breaks out, then it often pulls back. The Bollinger Bands expand as this happens, but it is crazy how tight these trade to these Bollinger Bands. We start to see this just trading in that channel. We're currently breaking down. When we get these big wicks outside of this channel, we're below VWAP, which is this blue line right in the middle. And once we're under that and we're under the Bollinger Band, this is a sign to go long. So what did I do? I went long. Point of control is above. I do it with ranges, so something to consider. Adobe still trending down. Amazon, huge gap down. Look at where we're trading. Like way outside. We just looked at that RK, right? Like what is going on with this? We saw they missed earnings. There's a long signal here. We're outside of the Bollinger. This was, a big green candle. Well, it was just so low. Like Amazon's a big company. Their earnings were forward guidance wasn't that great, but still it's a killer company. This was a deal and people knew it and they bought it up. So we're seeing a couple of very, very tight trading range candles. My guess, up. That's my guess. What else do you guys want to look at? Mara, could you look at Mara, please? I'm not selling calls at this price. Terry, I'm with you. I am not selling calls. When you look at a company like Mara, let's take a look at it. I'll pull it up here. Marathon is one of the companies I've had for a long time. The reason it is not typically as volatile as Bitcoin, but recently it has really come down with the price of Bitcoin. So we were trading above this $20 range, which was kind of out of touch for us, and it was too high. It was frankly too high. I mean, these companies, they make some money, but we have to keep in the realm of where is the stock price. And there was a move last year from September up until October, nice push to the upside, but I traded this very tight. I didn't roll my calls. Typically, I do not sell calls when we're under 14 on this particular stock. So are we way down? Yes. Overall, I have actually lost no money on Mara, which has been wild. So even though it's trading like at all-time lows, I actually have not lost money, because even the shares that I bought at $20 have paid me so much money in covered call writing, that I have more cash back that I've used to buy more shares when they're cheaper. So I like to buy my shares when they're under $10. Currently, boy, this is hard to read. 786 is the current price. So 786 is the current price. If we look at let's just expand this out just a little bit to find this range, so we can see these Bollinger Bands a little bit better. There was a long signal here on the Bollinger Band strategy, and VWAP is up here. So VWAP's around 14, whatever that works out to, 1490, and so that's the average price. There could be some selling at that price, if we decide to move away from this. Right now, there's opportunity. Am I adding at these prices? Very, very small amounts I will add. I have not added in the last little while. I've been thinking about it. I think there's lots of pressure on Bitcoin in general. I have a lot of exposure to Bitcoin. So it hurts when these come down, but overall, I have to look at it from a premium selling strategy, and I would just do not sell calls. I just sit on my long shares. One of the differences between me as an individual investor and then a fund that sells covered calls against a company like Mara is that I can choose when I do this. If you have, what is it? YieldMax has a ticker. Can't remember what it is right now, but it basically holds Mara shares, and then it sells covered calls weekly against it. This is the type of thing that kills those funds, because when the market comes down and the stock price drops, the covered calls get sold at this low level. And when they get sold at this low level, if there's recovery in the stock, instead of the account going back up, it's just capped. There's no potential to the upside. So it's a really unfortunate setup for those ETFs, and it means that they have lots of downward potential and not a lot of upward potential, unless you're in one of the enhanced ones that does like a 1-to-5 or a 1-3-0 ratio to the upside. What I'm looking at is I want to play these individually, and I set my own terms. So in this case, I'm just not selling calls. I'm totally happy to just ride out the stock price at this time. Okay, so hopefully that answers your question. Terry, you're in the same boat as me. I've been selling calls for a couple of years, and my cost per share is almost zero. Yeah, exactly. It's just like the cash just keeps coming back, and it's been great. And I'm totally with you. It has been fantastic. I have some that I've gotten back more covered call than my initial purchase price of the stock. So I am actually net positive while I own shares, and I track them each individually. Terry said I stopped selling at 12. Yeah, I'm 14. It's just like whatever, there is premium there. If I was going to do it, if I do get squirrely about it, what I might do is I might do it as a spread. So instead of just selling a call, I'll sell it as a call spread. And then by doing that, at least if it gaps up, if it just jumps, then there's a flat spot and then it starts to go up again. I'm not just completely capped. So that's one way to do it. But Easy Money is asking about Lulu. Let's talk about Lulu. And do I have that on my list? I don't have Lulu on here. It's one of the ones. Let's talk about it. I don't know where we're going with Lulu. I'm just thinking, I go through this, and I know I was like, I'm amped up the beginning of this stream, but when we're talking about, questions in Discord and stuff like that, I will go to the end of the earth to answer questions for people in Discord. I get it. The stuff we're talking about is complicated. So if you have questions and you ask something, I have a philosophy in life, which is like, there's no dumb questions. There's lots of people that can be rude to respond, but that I have no tolerance for that. There's so many Discords that I'm in. Usually the people that I associate with are just like salt of the earth people, and they genuinely want to help people, and they want to take the time to explain. Now, we have lots of resources, so you can go through and read and see those types of things. But then sometimes there's questions that come up, and I'm always there to answer questions. And most Discords that I'm in are like that as well. The people that I associate with. So I'm trying, I hope, I am feeling a little bit negative about some of these Discord services, especially the ones that just brag. Like, I think that's the worst. But anyways, I just would, going through this, I just wanted to say that don't feel like you can't ask questions about any of these types of things. So Lulu, when we look at what is going on, the trend is to the downside. So in general, and I'm not going to talk about the Canadian Lululemon Olympic outfits at all, even though the colors were terrible, Lulu. But that's my only comment. We got a long signal on the Bollinger Band. We're underneath VWAP. Point of control's at 168. Stock is trading at 182. We're seeing a slight move up. In this, I've got two sets of Bollinger. So I've got this outer one here, where the lower level is like at 125, and then the upper level is at 303, and then I've got this tight one that's like the 160 to 214 range, and both of the VWAPs, the middle line of both of those is on there as well. So you see those two middle lines. And so when a stock is down in this type of area, usually what I'm looking for is saying, well, that's underneath the volume weighted average price. So is there potential for this to go up? Well, we have to look a little bit further when we do that. So let's go over to, this is the cheater method. I can go through and I can do a bunch of math, or I can just belong to a service that tells me, like, here's fair value, 272, stock's at 182. Fair value is 49% higher than the current price. Good performance. It's trading, there's some bearish points in here, trading at a high price to earnings ratio relative to near-term earnings growth. And stock has fared poorly over the last month. Management's been aggressively buying back shares. And then there's for the upcoming period, they've revised their earnings. So let's look over on Seeking Alpha. Showing a valuation of only a C. So that does not correlate with investing.com, which this is showing that it's way undervalued. Growth is a D-. Doesn't surprise me just from the nature of the company. Profitability is high, which is great. So it's an A. That's one of the big metrics that I always look for. But the momentum is poor. And we saw that from the stock chart. So it's currently got a quant rating of a hold. And we can see that last price over the last year, it's down 54%. Which is interesting because then we've got a fair value upside of 49%. So that's about half of what it currently dropped. So there's potential that it could go back up. Is it going to go back up to 300? Probably not. So how do we set up trades? Let's talk about that. Let's pull up option strat. Let's pull up Lulu, and let's pull up a high probability trade. So first thing I'm going to do, I'm just going to go to like a diagonal call spread. Really simple. I'll show you how I like to build trades. So this is going to be, we're going to set this up as like a poor man's covered call. Okay, that is, we're seeing February 13th. Okay, this is just showing a long straddle. So we're going to change the expiration. I'm going to move this over. Okay, that's not working very well. Let's see if I can get that going here. Sorry, let's see what's happening here. I've been really enjoying using option strat. I've been trying to use it a little bit more because you can do a little bit more robust trading with it. So I don't know what happened. Don't know what happened. I can't get back in. Okay. From cybersecurity, which company do you like? Well, like Palantir is awesome, is it not? It's hard because some of those prices, some of those companies already have a high valuation, but Palantir is kind of the leader when it comes to cybersecurity. So I think that's probably where it would be. But again, I would want to set up something. I want to be like a range trade. So Let me, I need to get another browser window open here and see if I can get this working. Let's see if we can get this working here. It was being a little bit slow, wasn't it? No, not like me. Okay, backup plan. Let's go to Moomoo. We always have options. That's it, right? Like that's the joke. Okay, give me 1 second. I'll get Moomoo up here. One of my favorite new investing platforms. I've got a link down below if you guys want to check it out. But we're gonna go to the options tab on Lulu. We'll go to the strategy builder. Look at neutral trades. You know, I like to work based on a month out. So say I wanted to do something like a short strangle. I can take a trade like this, profits $570 if the stock stays between 159 and 205. That's a pretty good range. You know, if I want to take a smaller amount of risk, I can do this as an iron condor. I actually prefer to play butterflies more than anything. I feel like the risk to reward is slightly better. 43% probability of profit. The Condor's got a 47% probability of profit, but the difference here is that I can only make $730 and I'm risking $769. When I look at a butterfly, I can make $1,100. You know, it's unlikely that I'm going to make that, but the slightly less probability of profit made up for the fact that I could make slightly more money. Generally, these make money a little bit faster. So that's one of the things that I like. Now, I'm not going to show you that. Those are easy. We can just pick those out. I'm going to look at Lulu and say, okay, what happens if I want to put on a trade and I want to do some sort of income premium strategy where I want to make some money. So what if I was to sell the 190 call? And obviously, if we look at the curve on this, this is going to be negative delta, which means that this trade loses money if the stock goes up, and it can lose a lot of money. It can go down infinitely. Now, I'm looking at this saying it's undervalued, it's a hold rating, there's potential to the upside. So I don't want this type of trade, but I like the premium there. 1 month out, and I like that call premium on the March 13th date. So all I have to do is go out a little bit further. Let's go out to June, 127 days. This is about 4 months. Now I'm setting up a trade that I would be in for a month. This is going to be like just a very simple poor man's covered call. So I'm going to scroll down here. I'm going to look at the delta. And I'm going to go down to the 90 delta. So let's go here and we're going to look at what it would cost to buy, instead of buying shares, buying a call. Now this will give me upside potential. Now let's just take a look at what this trade does. And let's zoom in here a little bit. Okay, so what am I doing? I am selling the 190 March 13th, which is 30 days out. And I'm buying the June 18th, 127. This is the structure of this works because I pay a debit to open this trade. In this case, I pay about $5,165 to get into this. Now, the idea is that hopefully Lululemon goes up in price. Hopefully Lululemon goes up as high as 190. It's trading at 181 right now. It's up $6 today. So there's maybe some momentum to the upside. Well, what happens? Let's look at a return on capital perspective of if it goes to 190. This at expiration, 1 month from now, this trade makes $1,100. Now remember, this is a total risk of $5,165. So from a return on capital standpoint, these trades are extremely lucrative. This gives me the, about what does that work out to? Like over a 20% return on capital, 1,100 based on 5,100. The break even's 177. That's another thing that's really nice about this. Even if the stock was to drop down to 177, then at expiration, this hasn't lost any money. So that gives a downside protection of $4. That's not a ton. This is $4 downside. How can we make this a little more robust? This has got a probability of profit of 55%, so slightly better than buying stock. Has a nice, max profit of around 20% capital. And a nice easy trade. It's got a little bit of downside protection, but I think we can add more. So let's go back to the table and I'm going to show you how I like to add. Okay, before we get into this, let's just look at what happens if the stock drops. Let's go to the chart, and what if it goes back to these lows? So what is this level down here? This is only 169. So that it could easily go back to that level. What if it went down here? 160. Let's call it 161. So let's look at that option chart and put our mouse on 161 and see how much of a loss this takes. So if the stock is trading at 161, this trade would lose $1,436 or about 20%. So we've got about 20% risk if the stock drops down to recent lows. And this is real risk. So we want to try to eliminate that. The 160. I'm going to just go to the table. I'm going to go to the March 13th, which is where I'm selling my short call. And the first thing I could do is just move the call down. I could sell the 185. I could even sell the 180. That's even in the money. Let's look at what this curve looks like. So now my max profit on this is going to be 664. My debit is less. I'm paying only 4,700, so I've got less overall risk. My break even is slightly lower at 172. I moved my break even over by $5. If we were to go back to that same level, that 161 price, this trade would be down $982. Substantially less risk just by doing that, but at the cost of reducing the amount of money that I can make. Now, from a return on capital standpoint, I have a less percentage-wise, but it's still $600. $600 a month on a $4,700 investment. Probability of profit is now 64%. That is a very good adjustment. I'm going to split the difference here. I'm going to do the 185. This gives me a little more potential, a little bit less risk, and we're going to look back at that curve. So now it's $4,900 in total risk. I have a max profit of $868. I've got a 59% probability of profit. 175 break even. I like this trade. This is great, but I want to add a little bit of safety to it. So go to the March 13th, and what I'm going to do is I'm going to go down to, I'm going to look at the delta column. So 13 delta, 19 delta, that 160 levels at 13 delta. So what I'm going to do is I'm going to look at the 165. I can collect 246 for selling this put. Now I'm going to go out. I'm going to add this as a calendar, and it's going to be very simple. I'm just going to make it 1 week wide. The reason I do it 1 week wide is because this gives me an extremely cheap way to do this. So I am collecting, if we look here at the, let me just collapse that again. For the short put, I would be collecting $270-ish, the mid price between these two. It's around $270. And then I'm going to spend, for that same price, that 165, I'm going to spend 340. So it's going to cost me about $70 total. If I have a credit of 270 and a debit of 340, it's going to cost me about $70. That's going to cut into my profits. My max profit now is only $800. My probability of profit is 60%. But watch what happens to my curve. This is wild. So if I was to drop down to 161, so let's just go over here to, let's find it, 161. The current P&L is going to be 1143. So that's actually more. It's showing me that there's more risk on by about $200, but it's not counting IV expansion. There would be a little bit of IV expansion that occurs. So let's slide that slider up and take a look here again. 161. So this was 1188. Let me just, that does not seem quite right. I'm just going to delete these off here and just see what's going on. 161, how much did we have on at 161? We had about $1,200. No. At 161, we're sitting at about expiration P&L of 1248. And then to add those back on, I'll just go back into that again. We're going to buy the March 20th and then sell the March 13th, both at the 165. And we're going to go to the curve, and then we're going to add a little bit of IV expansion because there will be some IV expansion. And then I'm going to put my mouse down there. So we were 1248, and now we're sitting at theoretical, right? These are all theoretical. So very similar. So it really depends on how much IV expansion we have. Interesting that it's that much. The 165, 170, maybe 165. Let's do it as a 160. Let's see if that helps it. It should help it considerably. And this is where the playing comes in. You know, I micromanage my trades, and I go through all of this with every single trade that I put on, because what I want to make sure that I'm doing is I've done due diligence, and now I want to make the most amount of money that I can, taking the least amount of risk. Expiration P&L is only 669. That slight adjustment. I'm giving up. Max profit is now 940. 45. I've got a 58% probability of profit. $5,000 with a potential of making almost $1,000. So making almost a 20% return. Is there some upside risk? Very, 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 very slight. This still makes, you know, if Lulu like went to $350, this trade makes like $600. So it's not making as much as if it only goes to 185. But that's kind of the type of trade that I want. I want that risk reduction of 173. What if the stock doesn't move? This trade over the next month makes $676 if the stock doesn't move at all. It's pretty wild. And this is why I love being an options trader. I can like pick those trades very specifically. I'm getting alerts here somewhere. Okay. I don't know what happened with all of that. Hopefully you guys are still with me. We've got 14 people online. That's fantastic. Because there's so many of you here, I'm going to repost this because I was mentioning at the beginning about my alert service, and I recently added WAP.com as a potential way for you to sign up. And the reason I did that is because I wanted to give you guys a bigger discount. Patreon was capping the amount that I could discount people wanting to sign up for the Traders Club. And even when you sign up for a year, you could only get like an 18% discount. With this, I can give a 47% discount on people that sign up. And I am running right now a lifetime entry. So if you're interested in signing up, you want like a one-time payment. I've been running an alert service now for 9 years. I can't believe it. It's like, it has been life-changing for me, literally. Like, I was posting my trades while I was still working. I have transitioned from a working citizen to a lazy YouTube bum, and who sits around and does absolutely nothing but chit chat in my Discord room. But that's the life I've made for myself, and it's been fantastic. So if you guys are interested in checking that out, I do have these lifetime spots available right now. I'm going to keep it pretty limited. So I'm not sure how I'm going to cap that yet, but we'll see how many people sign up, because I don't want to like completely like devalue my future income, obviously, but I also want to help you guys out. So I wanted to see if that's something you're interested in. So I'm running it as a trial run. So you can sign up for like a 3-month, 1 month, annually, and then, or the one-time thing. So anyways, check it out. And then don't pay for both Patreon and WAP. Pick one or the other. They're the same. You get the same thing. Am I interested in Netflix here? Absolutely. I like Netflix down at this level. Let's take a look at where we are on the chart. I have been adding, I've got some covered call ETFs on Netflix, which I don't know if that's the smartest way. I was talking about these covered calls in general, and one of the problems with them is that when the stock declines like this, I feel like there's less potential to the upside for this covered call ETFs, because they constantly sell. They constantly sell covered calls against them. So am I being silly trading and buying into that? I started buying in like October, probably just before. I probably bought like this day. This is probably where I bought my first bunch. No, I'm joking. I've been adding to it, and what have I got? I've got the Netflix, the Yield Max one. Don't hate on me because I'm owning some Yield Max stuff, because these dividends are juicy. So you look at this and you're like, dividend. Look at all those dividends as the stock has net asset erosion. But 38 cents, 10 cents, 12 cents. I understand why people have been hard on Yield Max. I think they've actually made a really smart move here. they went from, so they were paying 40 cents. They went to this like slightly lower payout. It's pretty slight. But you know, they have dropped the dividend down. These recent dividends, like 8 cents, 7 cents. This makes a huge difference to the long term when we talk about why these dividends might be a little bit smaller. If you do 7 cents 4 times, that's 28 cents. Now compare that to 40 cents. It's a smaller yield, but I think this is a way more sustainable yield. And that's one of the things I actually like about what they're doing. Whether or not they're going to be able to weather the storm is questionable. This is where, you know, you've got to spread your risk out. Look at this, dividend's only 5 cents. It's still like astronomically large from a dividend perspective, these weekly dividends. So 8 cents on a stock that costs $10. So you can, for $100, you can have 100 shares and you're getting, you know, what does that work out to? 8 cents times 100. So $8 a week for a $1,000 investment. Pretty crazy. Okay, let's how are we asking? How was the performance of our alert service during market drawdowns? The quite good. Like I had a good year last year. It's always that's such a hard. It's such a big question. So because when you talk about portfolio allocation, I think it's so important, and it's one of those things that even myself, I don't talk about it enough. There's like the alerts that I'm putting out, and when I put out options alerts specifically, so options trading, you know, that is a portion of the bigger picture. So I spend a huge amount of time curating and trying to make those returns work for me. And they can do very, very well. You know, we can have outsized returns repeatedly. They can hurt as well. That's one component of trading. And I tend to only allocate about 20% of my net worth to that. Then I have my longer term strategies. And one of the things that I used to do, and I'm now kind of drifting away from it as my net worth grows. So depending on where you are in life, you kind of have to assess and say, what are we actually doing? So one of the things that I've been doing for many, many years is I've been keeping cash equivalents for that 50% of my total net worth, which means that only allows me about 30%. So if I have 20% allocated to option trading, and I have 50% allocated to cash and cash equivalents, so that would be like S-bill or just making cash, right? Fixed rate of return or slightly fluctuating based on prime, but no risk. So and then 30% to long-term holdings. So this would be like QQQ, IWM, things like that, like, you know, VU, however the vehicle is that you want to have like a long-term sustainability. Now, I've always liked to trade cover calls against that 30% allocation. But one of the things that I've actually transitioned over, and I started this pretty recently in the scheme of things, you know, I've been trading since 1996. So in April of last year, after that drawdown, I was looking at potentially allocating some more money. You know, when you sit on 50% capital in cash secured, not cash secured, sorry, but in cash equivalents, you have money to deploy when that portion of your portfolio drops down. So I was looking to allocate that, but I was worried about future risk. You know, these drawdowns can be big, and I live off of my investments. So that's the way that I make money, and I pay for my house. You know, I have to do those things. It has to make money for me. So I've actually started doing zero loss trades. Now, I made a video about it, you know, last fall. You guys probably saw that. I've been trading those for quite a while. They've been so great that although they're a component of my trading service, they are becoming a bigger portion of my portfolio. And I'm actually considering taking a good chunk of my cash portion, which, you know, at current rates makes about 4.3%, and starting to filter it into these zero loss trades. Now, the reason that I like those so much is because they have potential of making as low as like 2 and a bit percent. Like that's the downside. I may make less than the 4.5% I would get if I just had them in cash equivalents. But they have potential of making upwards of like 30% annually. So all of a sudden I'm looking at that and allocating more money personally for that. So when we look holistically at the whole thing, my trade alerts are just an amalgamation of all of those things. So it's like if a person came in and all they did was follow the zero loss trades chat and we're looking for, regular trading that has no risk to the downside, that exists inside of my trading service. If we wanted more speculative plays, I have my AI stock picks that are monthly. Again, very, very simple. Those stock picks last year, although they're smaller percentage wise, did almost a 40% return in last year. An absolutely phenomenal return. And that's simple, like 12 trading days in the year. So even right now, like if I was to pull up the metrics, I've got it open here, so I'll pull it up right now. I can't show that screen because it's got all the information on it. So it's members only, and the members already see it in my Discord. But if you look at the latest one, where are we? Where's that one? February's. So SPY currently is down 0.22% from February 1st. So it's like has had a small drawdown, just because we were pumped up on February 2nd specifically. But the AI stock picks are actually up 0.85%. So from an outperformance, if you look at like what has gone on cumulatively, the AI stock picks since inception, which was just last year, 38.59%, and the SPY has returned 22% in that time. So some portions of it have done extremely well, and then obviously some portions do not so well when we have long stock positions. There can also be like a Sharpe ratio thing that comes into play. Like if you look at my TNA trades, which I have on, they're a long-term, they get covered calls rolled on them weekly. It has been an absolute fantastic return. I've been in it for almost 3 years. It's a very, very static trade most of the time. And from a cumulative perspective, that has returned a 24% annualized return for 3 years in a row. So it's just like that just keeps ticking along. The drawdowns in that particular thing were terrible last April. There was some terrible drawdowns. So it is, what I've designed is a service that encompasses all gamut. So if you want to do some zero DTE, I don't do a ton of it, but when I do, I have that information available. Then I do a ton of like metrics-based, a 1 month out speculative trading, cash equivalent, non-stock holdings. Then I do long-term holdings. Then I do the AI stock picks. There's a gamut of different things. And the reason is because I like to play with a bunch of different things. I'm a complex investor, so I give all of that information. Then I allow you to look at it and figure out what suits you. I'm in a local club, tons of swing traders. Everybody likes to swing trade. They think that this is the way. I don't love swing trading. It's not my favorite. I don't want to like sit at the computer all the time. I want to put in my trades and I want them to work for me. So I've developed a system over the last, many, many years. I'm like 12 years option trading, just option trading. I'm at 30 now. This year's 30 years I've been trading stocks. So it's one of those things that's just in my blood. I can't take that away from myself. If I tried to walk away from it, I'd be like, well, what am I going to do? I've been watching this market for so much of my life and I love it. So it's just a way for me to, connect with people and come up with those really great scenarios. Which reminds me, we're going to do, it hasn't been announced yet, but I'm super excited about something that's going on. I hope you guys have checked out Theta Profits on YouTube. John runs an excellent service. He interviews people like myself. Always fun to go on there. I've been interviewed twice. Great little tidbits of information. he's got an exciting event coming up in March, which I'm like, yeah, okay, let's go, John. He's in Vietnam right now, enjoying some sun, and because he's from Norway, and they don't get that much sun this time of year, almost like us. Okay, what other questions do you guys have? I can't go too much into that. Race. Let's talk about A. Pearson saying, hey, how was the performance? Yeah, we talked about that. The performance was good. Performance was good based on what allocation you were in. So some of the pieces only made 0. They were relatively flat, but then other pieces, made 40%, which is good. And then we're going to look at race. Let's take a look at race. Why does, I don't know what race is. Let me get back to the screen here. Let's see if I can type race. Oh, like Ferrari. I've never traded Ferrari. 365 fair value is 340. Downside of 6.7. Raised its dividend for 4 consecutive years. Petrovsky score of 9. Wow, that doesn't happen very often. Trading high price to earnings multiple. Good performance. And let's look at what Seeking Alpha. I turned something on my Discord. My apologies for the beeping in your ear. Quant ratings a sell. Valuation is too high. Profitability is an A. So we got two different services, both saying the fair value is a little bit high. This one's saying it's quite high. This one's saying it's a little bit high. Profitability is great. The growth has actually been pretty good, but the momentum is poor. You can see that on the chart. We're seeing that downtrend. On 1 year, it's down 20%. Recently, it looks like it's up a little bit. Let's go to the 1 month chart, and we must add earnings or something, some sort of announcement. Went from 335, 367. And again, these are the types of trades. Like I would look at the volatility on this, and then I would say, let's pull up something here and just look at what is going on and how might I trade this. So we'll pull up race. Go to the options chain. February 10th, we got earnings coming up. So this would be an earnings trade. I don't typically trade long-term over earnings. So if you're going to do earnings, if the move is big enough, I mean, sometimes you just buying a butterfly is like the cheapest way to do anything. So just sell, we're at 365. It's a bit sucky. So I'll do it the traditional way so you guys can understand. But I'm basically buying a bear put spread, and I'm buying a bull call spread, and I'm hoping that this is $10 wide, pay $8.25 for this. What I'm looking for is like a nice risk to reward, and saying, if the stock moves outside of this between 351, remember it was trading at 335, a week ago, or if it goes up above 368, then there's potentially making $175 on this trade. The max risk, of course, if it stayed right around that 365 mark, and it would be the max loss is whatever the debit is to open a trade like this. This is one of the ways that on earnings, if it like traditionally, traditionally you learn that it's always got to be IV selling. You've got to, like, the stock has to stay between 351 and 368. From experience, I mean, both can work, but I think that a trade like this, if I was looking for earnings trades, I would look at a move like this. They have great earnings, the stock goes shooting up. They have crappy earnings, the stock goes down. It's like a neutral strategy. It's limited loss. Are you likely to lose the whole $800? Probably not, because even if it only moved a little bit at expiration, like you can get out for a smaller loss. Okay. What else are we doing? 500 December puts, 360, 380, Mahalo. 360, 380. You want to buy the 500 December puts, and then 360. Okay, let's pull it all up. I should have read further on that. That seems like a long duration, the December, but because you end up just paying so much money for those things, I think we can get the same sort of, there's going to be a couple earnings. Like if you look how many earnings like we've got earnings February, May, July, and November. So there's 4 earnings across before this put is out. So it can change dramatically. What was the specific? And then the 360, 380. I don't quite understand. Yes, in answer to your question, A. Pearson, 50% cash or cash equivalents or stocks with no downside risk, and 30% equities, 20% speculative option trading or speculative trades. That is exactly what that's exactly the type of allocation that I'm looking for. I mean, it really depends on where you are in life. Sorry, I'm getting distracted. This Easy Money, can you just give me a little more info as to which you've got? The 360, 380, are those all December? Are you selling? I'm a little bit confused. So just give me specifics, plus give me a date, and then plus 360 or minus 360 if it's short, and then plus the 380 minus the 380. Just make it so that anybody can read it, and then I'll be able to understand. Make it easy for me, please. So 360 trade was put on today. 360, 380. I don't know if you're long or short though. So that's the part that I don't understand. Okay. Brian, what underlines do you use for your no loss trades typically? I'll show you how they set up. I'll show you exactly how you can set one up. There are very few tickers that work well for it because I'm just going to talk about it for a second. So what it is we're buying stock, we're buying a put, and then I'm selling a call ratio spread. So the idea is that the call ratio spread has to collect enough credit that it pays for the put. The put has to be at the money or slightly out of the money, but close to the range. What it does is it gives us a little tiny profit tent. Because the profit tent is small, I want stocks that have a potential of moving quite a bit, but actually don't move very much. So like on Tesla, you would look at it and say, okay, well, Tesla, you can do this. You can sell a call ratio because there's lots of upside potential to pay for that put. But there's lots of downside risk, so puts are expensive. The problem is that Tesla moves all over the place and it never falls in the tent. So it's a combination thing. I'll show you my Visa, which is my favorite one to trade it on. I currently have them on MicroStrategy, but I traded a little bit different on MicroStrategy because I have look at this great range. Okay, so I just want to just show you this range. So this range between 360 and 320. Okay, currently sitting at 328. So this is why it's one of my favorites. It does trade outside of this range, but it kind of stays in this 30-point range. And what specifically, it trades in even a closer range than that. Lots of times it'll trade like this. When it comes down, it will typically move back into those same sort of consolidated ranges. We see this pretty frequently. So it moves into a range and then it stays there. This type of move in Visa is rare. Okay, so when we go to the options chain, what we're looking for is cheap butterflies. So there's dividend. We're going to go out 2 months. So this is like the super lazy way to do it. We go out 2 months. We are going to set up a call butterfly. That's going to be the easiest thing to do. So I'm just going to do it with all calls to start. So let me start at the top here. So 325, 328 is where we are. So 330 is the peak. That's our current price. I want to try to build something really conservative. It's only going to be 20 points wide. I'm going to buy the 320. I'm going to sell 2 of the 330s, and I'm going to buy a 340. And this trade just by itself right here, max profit is $895. Max loss is 105. That trade works perfectly fine. If you wanted to put this trade on 6 times a year, $100 risk per time, it has a 9-to-1 payout. When it wins, you could double or triple your money. You could easily make 3 times your money in a single win. So in 2 months from now, if it's trading between 321 and 338, it's a win. So that's effectively what we're doing. We don't need to go any further than that. That's already it. Now, the question is, how do you make that $100? Well, the $100, we would just look at this allocation. This is a $32,000 investment. So let me bring up my calculator here, and I'm going to say, if I wanted to buy Visa stock, how much money could I make? $32,000 is how much it would cost to buy the stock. If instead I put this into cash equivalent, like S-bill, which pays 4.3%. So this is, we're going to calculate to the day. So this is 65 days from now, right? So how much money do I make if I take that 32,000 and I put it into S-bill? So 32,000 times, if we do this over the year, it's going to be 4.3%. So it's going to work out to $1,376. We divide that by 365. This is going to give us our daily rate. So we get $3.76. We're going to times that by 65. This trade makes $245. So if I was to just take the 32 grand, put it into S-bill, I know I'm going to make 245 bucks. I take half that money, so half the 4.4, the 4%, and I buy this butterfly. That's what I'm doing effectively. And I'm hoping Visa lands in there. So let's go look at the chart, 338, 321. So I'm going to move these lines up here. 328 and something's going on with my brain. That's obviously wrong here. 338 and yeah, 321. So I did the 321. I did that wrong. 321 and 338. So there's the range. That's the, I'm betting $100 of the 240 bucks that I'm going to make. Now, I said it was a zero loss. So that is technically zero loss. I'm going to make 2% on the year for that, if I do that. But you can do it with stock. And this is where it's kind of interesting because then Visa pays a dividend as well. All I have to do is flip this call, this 320 call to a put. So I'm just going to go over here to the put and I'm going to buy shares. I'm going to buy Visa underlying. We look at the curve. This is going to be a zero loss trade. So at the minimum, it's going to make 60 bucks on the leg on the outside. My max profit is now 159. It has 100% probability of profit. And I'm going to collect the dividend, which is already paid out. But there we go. We're 31,940 bucks to get into this trade. And that's how they set up. I wish I could find ones that were as consistent as Visa. So if you look at my trade that I have on tomorrow, my options expire. It's wild. Let's just change this date to tomorrow. It's wild how much value there's still in these. So I have this exact trade on, but I have it expiring tomorrow. And you'll see I do actually have risk on at this point in time. I have some risk. But my expectation is that between now and tomorrow, because I watch this stock so much and I see how much it moves, it could move down this $3 that it moved up yesterday. And in which case, I will only profit $71 between today and tomorrow. But my hope is that it doesn't move very much at all. And then I'll put on another butterfly. I will roll out my current positions. If I was to buy these right now, they would cost me money. Let's just see how much it would cost me to get out of this. So I'm going to delete the shares and I'm going to reverse these. So this is what the closing cost would be to close these. And I would have to pay 370 bucks to get out of this. Well, let's look at what I have. I have a long put at 320. Well, that I own. I mean, if the stock drops, I make money. And right now it's got no value. The 330 calls are where the value is. The stock's trading at 328. This is perfect. This is exactly where I want it. These are going to expire worthless. There's going to be no cost to get out of these tomorrow. And then I have the long 340 call. So it's protecting losses from the upside from selling these short calls against it. But I could pay 370 bucks today or could wait till tomorrow. And that 370 bucks goes into the coffers against my trade. And it's like this trade, it's like magic. magic money. I don't even know what I want to say about that. Just wanted your thoughts on this options action. 500 race. December puts 360, 380. Not my trade. Sorry, Easy Money. I can't understand what the puts are. Are they both short? Are they both long? I'm assuming when it's like 360, 380 that one's short and one's long. And then 500 shares of race. I don't know. If I can't understand it, it's hard for me to set it up. So my apologies for not being able to. And if somebody's posting those ideas and they're not being very clear, then tell them that it's not very clear. Like if you understand, then you should be able to decipher and then tell me. But I from that, I'm assuming it's 500 race stock, which is lots. And then I don't know. I just don't even know. I don't know what to say. I try to make things clear. Okay, I got 4 likes. What is it? It's 12:17, guys. You guys are amazing. This is so good. I hope you get a chance to make some money this week. You know, that's the thing that we're trying to do the most is like learn, have fun, but most importantly, let's make some money. Let's get rich together. That's what we're trying to do. You guys are amazing. I will see my patrons or some of my drawbridge. I got to change the wording now because now you can sign up to the Drawbridge Traders Club on either WAP or Patreon. Either one. WAP gets a bigger discount. So if you wanna check that out, we're gonna see how that goes. So my Drawbridge Traders Club members will see me on Thursday for another live stream where we go over all the positions. We look at that. They get access to that stuff anyways. And then everybody else, I'll see you next Tuesday. We're going to do some more trading. Thanks so much, everybody. Take care.